Pandas for Finance, Episode 14, The Capstone Backtest. Equal weight 5-stock portfolio versus SPY. Annualized return, volume, Sharpe, drawdown. Everything from the previous 13 episodes assembled. This is the climax. Load, clean, pivot, returns, weights, Sharpe, drawdown, benchmark. Every concept from the series in one script. The portfolio: Apple, Microsoft, Google, Amazon, NVDA. Equal weight, 20% each. Held statically over 8 years. The benchmark, SPY, the S&P 500 ETF. Risk-free rate of 4% for the Sharpe calculation. The question: did mega-cap tech beat the market? Open NVIM. We're writing the capstone in one file. Display options at the top. Width, max columns, float format. Pandas, pretty print so the report tables fit cleanly. Constants. The 5-stock portfolio. SPY as benchmark. 4% risk-free rate for the Sharpe denominator. Read parquet. Filter to the portfolio plus benchmark. Pivot to wide format. 1 column per ticker, date as the index. Forward fill any gaps. Pivot leaves NAN where a ticker didn't trade. Fill carries the last price forward. Daily returns. .pct_change on the wide data frame. Drop the first row of NANs. Equal weight portfolio. A weights series. 20% for each of the 5 tickers. Multiply daily returns by weights, sum across the row. That's the portfolio's daily return. Stats function. Takes a return series, returns, annualized return, volume, Sharpe, max drawdown, and final wealth multiplier. Annualized return is 1 plus daily mean to the 252nd power minus 1, 252 trading days in a year. Volume is daily STD times square root of 252. Sharpe is excess return over volume, risk-adjusted return per unit of risk. Wealth curve from cumulative returns. Max drawdown from wealth divided by expanding peak, the worst peak to trough loss. Build the report. 1 data frame with 2 columns, portfolio and SPY. 5 rows of metrics. The whole comparison in one print. Wealth curve tail and the per stock Sharpe leaderboard. Then save and run. The numbers. Portfolio annualized at 39% versus SPY's 16. Sharpe 1.18 versus 0.64. $1 grew to $9.72 on the portfolio, $2.90 on SPY. The capstone in 3 patterns. 1. Pivot to wide for portfolio math. 1 column per ticker, date is the index, then .pct_change for returns. 2. Equal weight portfolio. A weights series, multiply by returns, sum across the row. That's the daily portfolio return. 3. Stats, annualized return, volume, Sharpe, drawdown. 5 numbers tell the whole story. That was the Capstone backtest. Mega CapTech beat SPY, but with more volume and a worse drawdown. If this was useful, like the video, subscribe for the rest of the series, drop a comment with your questions for Claude to reply, and share with anyone who'd find it useful. One episode left. Episode 15. Pandas plus DuckDB at scale.